Hey everybody, welcome to another video. I figured I'll do some run some DCFs, so just throw out some tickers. So the market's just going crazy. It's now some people I know have been like sitting on the sidelines waiting for the market to come down, and I'm like, you just can't wait. I mean, the economy is strong. Don't try to time the market. You never make money. This is a great run up. My portfolio is up like 50% in like 6 months. So it's just, I mean, thank God I'm not sitting on the sidelines. I never hold cash, really, almost never, because you never know. Like you hold it and the market goes up 30, 40%. Then there's a pullback. I mean, if you try to time it, it's like you never seem to make money. You always make the wrong decision. It's just like buy and hold. That's the only thing I know. And just buy the S&P 500 or buy an index if you're not sure. That's what I like to do. If I have extra money and I'm not sure what to buy, I just put into S&P. I probably bought 30 times in the S&P. If I look at my portfolio, it shows each ticker that I own. It shows my tax lot, like when I bought it, the date, and how much. And there's so many times you see like bought 1 share of the S&P 500, bought 3 shares of the S&P 500. And then when I see something like, for instance, I bought Netflix and throw out a ticker. If you want me to do a DCF, throw out a ticker. I could do a DCF. We'll look into some stocks. Like I always wanted to get Netflix, and I'm really, I was upset I missed the big run up because I did want to buy it in 2012, but I kind of held back, and it was up to 700. Well, not quite. It's like 690 was the peak, and then as it was coming down in January. What was it? January, I got a 388. So I thought that was a good kind of time to get it. It seemed like it was pretty depressed. And then 3 months later, I'm down 50%. I was a little worried, but now I'm up 60% on my investment. So I'm happy. LAZR. Yeah, LAZR. Luminar. Of course, good pick. Luminar. Let's see. First, you want to get your WACC, weighted average cost of capital. That's a discount rate. You have to apply to the future cash flows, 8.8%. Laser. Let's look at the future free cash flows. Make sure it's negative the future, so we can't really do a regular DCF. Let's calculate it. Calculate the future off the revenue. Okay, so we'll put in the WACC. Pretty low WACC for a company with negative future free cash flow. So let's go to Yahoo Finance, get their actuals. 171,755. So it's trading at $1.01, 755 million market cap. Let's get the future. It is harder to do DCF on a company with all negatives in the past. It's not impossible. You just have to do a little more estimating. If you look at a company like Microsoft, it's probably a lot more safer prediction. Kind of like if you were looking at your friend's business and your friend consistently made $70,000 to $100,000 a year on profit, if you predict the future, you probably have a decent chance of predicting it right. If he's been averaging $85,000 profit for the past decade, there's a decent chance he'll continue doing that. But if it's real volatile, 1 year he loses 300,000, next year he makes 50,000, next year he loses 300,000. You kind of don't have an idea of where he's going to be in the future. So, but it's not like you can't try. Nice revenue growth. It went from 14 million in 2020, more than double to 30 million, then 40 million and 70 million. I don't know why the trailing 12 months is different than the 2023. Sometimes Yahoo Finance doesn't quite update the numbers, or the time periods may be a little off. What the hell? Why is this? I thought I fixed this. Why is it still here? Oh boy. What's going on? So I'm just updating my spreadsheet. I hate when I have all this stuff in here that's not needed. I like a clean spreadsheet. Something I'm deleting is causing a break. G4 over G5. Okay, there it is. So what the hell's going on? C6 over C10. C6. C9 over C12. How's everybody's week? So I'm sure everybody saw the big news with Apple antitrust violations. It's like you can't be a profitable company. They have to try to break you up. They did this with Microsoft, and Bill Gates always complained about it, like the antitrust violation when Microsoft had too much control, too much pricing power, and he said that's the reason they didn't grow as quickly as they should have, even though they're the biggest company in the world now. He said they never really tapped into the phone market because the government was interfering with their growth. But the thing is, we have options. We're not forced to buy an iPhone. I mean, they just make a better product. People like it. So I don't. What's wrong with that? You know, people have their option. You know, if there were no options, if other companies were totally priced out of the market, it's like the only entity that can be a monopoly is the U.S. government. L9. Okay, here it is. How did I miss this? Sorry, I'm just trying to update this. Okay. L4. L6. %. L4. I don't even see how it's. Oh, there it is. C25. That's the problem. C25. Come on. Here we go. It's L9. Okay, it's pulling from there. So instead of C25, so I have to replace C25 with L9. One replacement. So what's everybody's thoughts on Apple? I mean, Apple is doing terrible this year. It's down like, what, 20% this year, while almost every other stock is up like a ton. I mean, everything's relative. So if a stock is up 10%, like, okay, say you look at, so if a stock is up, okay. Okay. So like, if you look at 1 year performance, say of a stock or whatever, and it's up 25%, that could actually be a terrible year. I'm just making things up, but say in 2010, and say it's 2011, we're doing this. 2010, you made 25% in your portfolio. That could be a terrible year. In 2011, you could lose 10%, and that was a great year. And how does that make sense? Because you made 25%. How could it be a terrible year? Because you have to compare it to the market. If the market was up 40% for the year, you didn't do that great. I mean, the market, you could just invest in the market. And you might have a great year if you're down 10% because the market was down 30%. So that's a great year. If you were only down 10% and the market. So that's why I'm saying everything's relative in life. So, but Apple is down like what, 10-15% for the year, which is awful because the market is killing it. Let's go back. Where were we? Okay. Luminar. So yeah, really good growth. So what's there? Let's continue on this trend. Let's just assume well, their revenue grew 71% from 2022 to 2023. So that's a lot of growth. If they continue that growth, it's hard to see. That means it'd be 119 million. And 205 million. It's too much. Let's do a 20% growth. Okay. So we're going to assume it's 84 million next year, 100 million after that, then 121 million after that. And we'll keep the negative free cash flow because that's what that's what's projected. And let's say yeah, it's hard to value. So if they do grow to 141 million of revenue in 4 years, I'm still at $1. Yeah, it's they would need to grow quite a bit just to even hit their market cap. Back in the 80s, Gates was aggressively taking over competing businesses. That's why the SEC went after them. Yeah, this would be more of a just kind of reading about the company, Luminar, because a lot of the stock price for companies that are losing money is just the perception of whether they'll make money in the future. And if they're in a hot industry like AI, what's it? Luminar? Yeah. Oh yeah, LiDAR. Yeah, that's what they do. They do LiDAR for self-driving cars. And I remember Elon was very negative on LiDAR. LiDAR is doomed. He was very saying how bad it is of a technology. Tesla co-founder warned the crowd about self-driving cars that rely on LiDAR. LiDAR is a fool's errand, Elon Musk said. Anyone relying on LiDAR is doomed. Well, that probably, I mean, it might be true. He might really feel that way, but it is like a direct competitor to his technology. He doesn't use LiDAR. Let's see why he says it's doomed. LiDAR is power hungry, needing more power than other sensors. Out of all sensors, LiDAR requires the most power, which has the effect of meaningfully decreasing the car's driving range. So you could read about somebody who doesn't like LiDAR, and it sounds like it's a bad technology. But then you read an article about someone, is LiDAR a good technology, who is pro LiDAR, and it sounds like the best technology in the world. This pulsed laser technology has so many applications for mapping, providing detailed information on data on the environment. If you're looking for a 3D scanner for a business application, LiDAR technology gives you the power to collect the geospatial data you need. So if you're driving a car, and say it's nighttime, your visibility is pretty low, right? With LiDAR, it's supposed to detect things way out, like a few hundred feet or yards in front of you. So if you were about to drive over like maybe a pothole or something in the road that can tear your tire up, LiDAR is supposed to be able to sense that and provide it to you, which would be great, because when it's dark out, you're at a much higher risk of maybe hitting an animal, something like that. He mentioned that their computers can do much of the same thing. Would you mind taking a look at 4 or TMDX? But it is a really interesting technology, and the thing is, like, even if something is great, do you remember planes? Do you remember there was the what was the name of that plane? There were these planes that were manufactured that went like 50% faster than the average plane, but it never got much traction in the market because it could get, like, when you go to California to New York, it might take 5 hours on a regular, like, Boeing. But if you can get there in 3 hours, you would think a lot more people would want to take that flight rather than sitting on a plane for 5 hours. You sit on a plane for 3 hours. Even it costs you a little extra money, some people are willing to pay that. But there were planes they built that worked fine, but there's no one. It didn't seem to get traction. So you could build a much better mousetrap, but unless you have really good execution, marketing, distribution, it may not go anywhere. You kind of like Kramer and Seinfeld. Just because you have all these great ideas doesn't mean you'll be wealthy. You need to execute on those ideas. Does anybody know what I'm talking about? That plane? It must have been like in the 90s. So this could be that scenario unless they found a way. Yeah, they just need to scale. It's just hard to. You have to convince people. I mean, I think their customers would be electric vehicles, right? Because that's their main product. I think LiDAR can go on a lot of other things, but I think their focus is on EVs. And if the biggest EV company in the world hates your product, obviously that's going to make it a little difficult to get their business because they're the king of EVs. They're number one. So, but there's other EV companies. There's plenty of other EV companies that you can work with. Let's see what they say. I mean, it's a cool technology. It's hard to get too much. Where's the I'm looking for the investor presentations. It's dipping and I get a huge stake in the company. They're building a new Concorde speed passenger plane that doesn't cause the sonic boom, so we'll be able to fly over land. Yeah, it's really about, like, they don't even need to, like, sell a product to an EV company. I mean, obviously they need at some point, but if they just say they have now a partnership with Rivian or a partnership with, another, it has to be somewhat an EV company that's selling, some cars at least. There's a lot of crappy EV companies out there, but if they just even say that, the stock will go up a lot. Yeah, like Volvo or Ford, they have plenty of EV cars. What does it say? 2024 will serve as a major inflection point for Luminar. Over the past handful of months, the team and I remain laser focused, no pun intended, on de-risking our business and, most importantly, our upcoming launch with Volvo. So that's a big deal. See their new main vehicle, the X90, featuring Luminar as standard on every car. Today, Luminar stands in stronger position to fulfill its mission. Let's see if Tesla is even mentioned. No. So yeah, building relationships with these. I mean, EVs really took a back seat. Remember how big EVs were? Apple totally exited the vehicle market. They were really all in. They were spending tens of billions to develop their own electric vehicle. They exited it. It just didn't take off, and it's a tough industry. I mean, you don't even hear anymore electric vehicle sales. Because it's still just such a small part of total vehicle sales. I mean, I love the idea of EVs. It's just, I don't want to I want to be limited. I could only drive 300 miles. I'm not going to sit there for 5 hours while my car gets charged up. It's just such a 2023 also marked the first time EV sales surpassed 1 million. So 1 million in 2023, which is such a small total vehicle sales in 2023. What are total vehicle sales like? 50 million? 15 million. So 1 out of 15. So you're talking 6% of the market. I mean, it's not a small number by any means. It's still it's a growing market. Not that tough. There's 100 EV companies. There's so many EV companies, but this is exactly what happened in the early 1900s. Up until the 1930s or 40s, there were so many companies. Everybody was starting their own company to make ICE cars, internal combustion engine cars. It's a new thing. Vehicles. People are starting to buy vehicles. Everyday people, not just the rich. So there's so many vehicle companies, so many companies making cars that went defunct. Only 3 made it alive, into 10 plus years. And those companies are like the kings, GM, Ford. They're still pretty big companies. MULN. EV is much easier to build. Is it really? I didn't know that. It's easier to build. Mullen, a 27 million market cap. Let's just finish off Luminar. I just want to see how their stock has performed. So they were a SPAC. I think I knew that. You can tell it's a SPAC when it's a flat $10. And like most SPACs, it had a huge run up, and then it went down to 90+%. So it's trading on its all-time low. It looks like. So they're gonna have to do. So it could be a good time to buy it. I'm at 287 a share. Yeah, 287. It's a good. It's a good price target. You saved a lot of money. There's a lot of people who bought in at $10, $20 a share. So the engineering for ICE engine is insane. Toyota Supra uses a BMW engine because they didn't want to waste billions into R&D and production of a new engine. What's up, Devon? Does anybody have a company that actually generates positive? It's just such a guessing game for these companies with under 100 billion market cap. LiDAR is slow to acquire and target, and moving fast is unreliable. 4 shift for payments. 5 billion. That's a decent sized company. 4. Let's see. I'm not too familiar with 4. Is anybody familiar with this company? 4 shift for payments. Let's see if their future free cash flow. It's positive. Okay, so that makes it a little easier. FOUR. 68, 5.9. 68. $5.9. Let's see the WACC. The weighted average cost of capital is how much money it costs you to fund growth. So it gives you the weighting of your debt and equity, and it combines them. So like so you look at how much debt you have. Say you have $1 billion of debt. And then say you have $3 billion of equity. Okay, so your percent of debt is 1 billion over your total capital structure. So your total capital structure is 4 billion. So 25% debt. So you don't even have to do any calculation for equity. It's just 1 minus the 25%. So you're 75% equity. Now the hard part is what's your cost of debt? Let's just say that's how much interest you pay in your debt, and then you have to subtract out your taxes because you got a tax deduction on debt. Let's just say it's 5%. And what's your cost of equity? That's really difficult. How do you figure out cost of equity? You actually use your beta. It's based off your beta. Generally, equity costs more than debt. So say equity costs you 12%. So the way you calculate your WACC, you have to do a blended rate of the two. So the cost of debt is 5%. That's how much it costs you to obtain debt. And 25% of capital structure is debt. And then you add your cost of equity, 12%. That's how much it costs you to obtain equity. And that's 75% of capital structure. So your WACC will be 10.3%. If that makes sense. I could, of course, break it down a little slower and show you more things. But I used to actually calculate the WACC when I used to do videos. Where were we? Okay. So let's see that future free cash flow. Okay. 400 million, 500 million, 650. Oh wow, it's trading almost exactly where I calculate. I calculate $71. They're trading at 68. So it's pretty close. It's pretty close. So I mean, I buy companies that are overvalued according to my model. I have done that, and I would sell companies that are undervalued according to my model. The model is just one thing. You have to look at other things. Like if you're getting sued by the government for antitrust violations, that could be a problem. But yeah, but I always like to look up these companies just to get a kind of an idea of what they do. Is this like a payment processing company, Shift for Payments? Is a payment processing company in Allentown, Pennsylvania, founded in 1999 by a 16-year-old kid. Wow. He's probably doing well. It's pretty impressive. They process for over 200,000 businesses in retail, hospitality, leisure, and restaurants. They specialize in commerce solutions such as mobile payment solutions, mobile payment software and hardware. When a company while working as employee of a payment processing company, the 16-year-old Isaacman, who earned his GED, identified what he saw as inefficiency in the industry. In response, he launched United Bank Card in his parents' basement. At the time, it generally took merchants about 1 month to set up a payment system, and merchants had to pay for their credit card readers and sign a lengthy application. His company cut the setup time to 1 day, gave merchants free credit card readers, and only required merchants sign a 2-page application. They were bought out by Fiserv. Fiserv okay, so they were just acquired. Fiserv, Amadeus, to acquire Shift for Payments. So this is probably in process. And okay, so Fiserv and another company are competing to acquire Shift for Payments, a $7 billion market value. What's gone down? This was February 28th. So that's interesting. The stock has gone down. So once they mentioned this, it was an acquisition target, the stock went down like 15%. You would think it would go up, right? Well, it did go up, then it came down. It's done pretty well. They IPO'd at $33. So they doubled since IPO. Supposedly they made an offer but didn't comment on. It takes time for these acquisitions to go through, because not only do both parties have to agree, but then you have to get approval, so it's not an antitrust violation. So they have to get government approval and other approvals, possibly shareholder approvals. Yeah, I know Fiserv is a pretty big company. They're 92 billion market cap. So yeah, that's really the goal of most companies, is to get acquired. Very few companies are able to grow to the point where they just acquire other companies. It's very rare, because like a company like Apple will acquire 50 companies every year, all these little smaller companies, and they just keep acquiring. But it looks pretty good. It looks like a pretty healthy company. That's what I always. One thing I want to try to do is try to identify a company before it gets acquired. So this. Arbitrage. There was a website where it gives you any companies that are going to be acquired but haven't been acquired yet, and it gives you like the arbitrage you can make from buying a company now, in hopes the acquisition goes through, then you're guaranteed to make like a certain return. That's called arbitrage. But there was a website that lists all the companies that are going to be, or possibly going to be acquired, but haven't been acquired yet. So they show the arbitrage. Of course, not every company will get acquired just because it was announced. Anybody know what website arbitrage companies? I'm surprised it's not coming up. Maybe this website. Inside Arbitrage. Maybe they don't have the website anymore. It was a nice website, very easy to read. So this looks like could be it. Okay. Acquisitions. Choosing compatible. No, I'm not. I can't find it. I guess the website's. I guess there's no website. Too bad. It was a good site. Damn. Okay, I don't know if I can. Yeah, CEIX. Yeah, I looked at that once, I think. Console. $8.3 WACC. So the higher the WACC, the lower the valuation. Because the higher the WACC, the more expensive it is to obtain financing. Yeah, no problem. Interesting company. Console. Okay, 85, 2.5. Let's see. Future free cash flow looks pretty flat. It's around the same number pretty much. Wow, it's really, is this right? How could it be? It's so undervalued. Console Energy, 2.5 billion. Well, I'm at 150, and it's trading at 85. Looks really, really undervalued. Thermal coal. If you want to get into commodities or alternative for oil, here you go. You really bottomed out in at the end of 2020. It's only $4. I don't know if you guys follow coal, but coal has been surging. Price of coal. Is there a ticker that tracks coal? Exchange traded concepts. Is this MTF? Is this coal? Okay. Ticker tracks coal. Okay, here we go. Okay, here we go. This should move a coal, but it's not showing up. Oh, I don't know why it doesn't. This is weird. Is it coal? Okay, well, the stocks for coal. Next gen is good for coal. Coal is cool. Next gen energy. Wait, I put. Here we go. Next gen energy. They probably track each other. They kind of track each other. This stock is doing a lot better. It's a good industry. Coal, commodities. Most commodities are. There's been a commodity boom. Copper has been doing really, really well. You need a lot of copper for a lot of EVs or all the infrastructure for green initiatives. Look at that, and just in a couple of weeks, it's up like 20%. So yeah, it's up a lot. How about Sega, Sammy? Yeah, I mean, they do say gold is a good hedge. So I imagine other commodities are a good hedge. But I've noticed when there's a really when there's like a crash, a market crash, gold goes down and other commodities go down. So you can't get a perfect hedge unless you, I guess, short the market or doing like an inverse. But yeah, generally, but I don't like to invest in like strict commodities. I don't mind investing in like a company that sells a commodity, but just in straight commodities, there's really no intrinsic value for a commodity. So let's look at gold compared to the S&P index. Let's see if there's an inverse relationship. See, I mean, it almost tracks it perfectly. The blue line is gold. and the red line is S&P index. So they kind of move together. It's not that much of a hedge. The gold is up 62% in 5 years. The S&P is up 87%. I mean, it's a little more volatile. You can see the lows are a lot lower, especially during COVID, and the highs are higher. But it's not like if you invested in gold, you would have saved a lot of money when the market crashed. You would have saved a little money, but when the market went up, you wouldn't have made as much money. Yeah, I usually don't invest in commodity stocks. I do like ET. I've done well in ET, and because it's almost like a timing thing when you invest in a commodity. Because if you time it wrong, it may be years before you get your money back. But if you time it right, you have to you can't wait too long, because it doesn't go up in a straight line. Like, if a really good stock will go up, not in a perfect straight line, but it'll go up historically. Where gold, it has these kind of like, it will go up over time, but it could take years. Like, you could see in August 2020, if you got it here, it took you 3.5 years to make 10%. I mean, unless you timed it well down here. But even if you did and you ran it up here, you would have had to sell after a few months, because you would just sit in there and you wouldn't see any more gains until recently. But that's the thing. You don't want to try to time it where you buy it and then sell right away, because chances are you'll probably not time it right. What other tickers did people mention? For SoFi, yeah, it's an interesting company. It's one of those kind of meme companies. It's really struggled. Wow. I thought they were doing better. I didn't realize they were down so much. Because I bought new holdings, which I thought was similar to SoFi. But I just got really lucky with this one. I'm up 170%. I bought it in June 2022 at 4.25. So I mean, I didn't get the very bottom, because it did fall below 4. It was 370, I think. But I got it really close to the bottom at 4.25, right here. And I just been riding it up. I'm up 170%. It's great. SoFi, if I would have bought it at the same time, I would have been up 25%. So it's not doing nearly as well. And Nubank is a Brazilian company, so they have half of Brazil uses Nubank. But the thing is, it's a great alternative. These fintech companies, especially if you don't have a bank account. In the U.S., it's pretty easy to get a bank account. You don't need that much money. As long as you're a U.S. citizen, because I know some people who are illegal immigrants from South America, so they can't get a bank account because they don't have So they have to deal mainly in cash. But there's a lot of other people who are legal and they just don't have a bank account because they just don't have that much money. So these kind of alternatives, these fintech, these online banks, are really helpful. Does anybody know why does SoFi? Why is stock doing so bad? Like, what's Does anybody ever read the conversations in Yahoo Finance? It's interesting. Some of this stuff is interesting. It's not the refi business that's important, and it's unlikely old loans will be financed at higher rates unless it's. Let's see what they say. Okay, so here's their most recent presentation for Q4. So they have 7.5 million customers, and it seems to be growing every single quarter. I mean, the growth is getting less. You see that growth was over 100%, and now it's down to 44%. But they're still growing. New product additions. So 7.5 million customers. So some customers use one product, like a savings account. But some customers have two products. They might have a savings account and a personal loan. Some customers have 5 products. So the average customer has like 1.5 products. So that's why products is more than customers. And that's growing at a similar rate where it was over 100%. Now it's down to 40%. They acquired Galileo. I don't know when they acquired them. A few years ago, but when did SoFi acquire? In 2020, SoFi will pay a total $1.2 billion. Galileo's digital payments platform enables critical checking and savings accounts like functionality via its powerful APIs, providing companies with an easy way to create sophisticated consumer. So that's kind of the name of the game. If you have, like, say, 5 million customers, if you want another million customers, you can market more or open. Or if you're a physical company, you can open a physical branch in a number of different cities. But really, the easiest way to grow is just to acquire a company that has 1 million customers. If you want to add 1 million new customers, just acquire another company. So that's how they do it. Look how much Galileo, 145 million accounts. Is that right? 145 million accounts. And that growth has slowed a lot. You can see the growth was much more aggressive. Now it's down to 10, 11% growth. So like any bank, they lend money. They people who want to buy cars or homes, or they need to fix up their home, they take a personal loan. So their personal loans are growing. But there's a lot of concern with the regional banks are going to go bank. A lot of regional banks will go bankrupt. Possibly a fintech will also go bankrupt if there's if there's concerns, regional banks will. That's how company like JP Morgan gets so big, is they keep acquiring these banks that fail. Quarterly adjusted net revenue. So a bank's revenue usually the main source of revenue is interest spreads. So if you have a savings account with SoFi and you get 2% interest, and say you have $10,000 in your savings account, so you get $200 of annual interest from keeping your money there. What SoFi does is they take that $10,000 and they loan it to somebody and charge them 11% interest. And SoFi receives $1,100 from that person, because that person borrowed $10,000 and they pay 11% interest. So SoFi on your $10,000 makes $900 a year. So the interest spread is obviously 9%. So interest spreads, the difference between the amount of money they lend out and the amount of money they pay. But banks, what the hell? But banks receive money from other sources, not just deposits, but they take on debt or they borrow from other banks. And fees, like you have, checking account fees or bank account fees or loan products. They charge fees on loan products. So most banks, a majority of their revenue is interest, the spread in interest. Like maybe 75% of the revenue is this and 25% in fees. But net revenue is net of expenses. EBITDA is high in the fourth quarter, 180 million. Let's see if they talk about how, this is hard to see. This is their members, their products, lending products. So if you want to get real deep into your due diligence, you can see student loans for 2023. They lent out 2.6 billion of student loans, and personal loans nearly 14 billion. Home loans 1 billion. I remember doing a video on this. Look how much their student loans went from 4 billion to 2.6 billion. It really gone down a lot, student loans. Same thing with home loans. It was 3 billion in 2021, way down to 1 billion. But personal loans grew a lot, enough to cover the shortfall in the student loan and home loan drop. So personal loans went from 5 billion to 14 billion. So total of loans was 17 billion in 2023, and it was 13 billion in prior years. The 10K would be good if you really wanted to. Net revenue is up a lot. So if you really want to get good at like financials, reading financial statements, I mean, I think this is like understanding the financials for like a regular company like a Microsoft is like you know, like the minor leagues. If you to really understand bank financial statements, it's like the major leagues. It's just so much more complicated. But you should do it and ask me questions because it's very confusing and it's not too straightforward. But once you understand it, it's very interesting, and you know, because when a bank has debt, like when you give money to the bank, when you give $10,000 to the bank to put into a savings account, that's debt. That's debt on their balance sheet because they owe you that money. It's debt to them. It's an asset on your personal balance sheet. When you have list cash as an asset, cash is an asset, right? But to them, it's debt because they owe you the money. Sega, Sammy, or Nintendo? Oh yeah, what do you guys think about the Fed? They lowered it. They lowered we were projecting 6 interest rate cuts this year, but the economy is so strong that they lowered it to 3 interest rate cuts, and there's not a pullback usually because the market reacts before things happen. So the market doesn't wait for interest rates to get cut. We just start buying now. Once they cut interest rates, it's way too late. You missed the run up. You can't wait. But it's such a strong interest rate cuts. You know, they cut it to 3, and people are saying it might actually be 2. And there's a small percent chance they will raise rates. It's very small. Like I think I read 7%. But you never know, like because the economy, if it continues growing at this robust rate, there's really no reason to cut rates. So what do you guys think? Do you ever see like when you watch like the you know, those channels where they talk about stocks, like whether on CNN or anything, they say dovish or hawkish. I put a quiz. So if they say dovish, that's somebody who is very is like pro interest rate cuts and quantitative easing, lowering interest rates, growing the economy. And if somebody's hawkish, they're pro raising interest rates or quantitative tightening. It's just all these buzzwords to kind of confuse you, but it's good to know what it means because what is Sega Sammy? What does that mean? Oh, that's a company. I never heard of that. I mean, I played Sega Genesis. But is that the same thing? Sega Sammy is a Japanese. Oh, okay. I didn't even realize that. Both companies are involved in the music industry. Remember Sega Genesis? That was Sonic the Hedgehog. What games made it really popular? Sonic, was that the first really big game for Sega Genesis? I'm trying to think. Street Fighter was Super NES, right? Sega had Madden, right? Madden was big. I don't really. After middle school, I stopped playing games. I stopped buying consoles. I did play them at friends' houses, but I lost interest after middle school. I don't know why. So I don't even know, like, the past 20 years, I haven't been playing any of these games, but from the 80s, I do know Nintendo. I love Nintendo. Regular Nintendo. That was my favorite system. Sega, Sammy. 2.7 billion. Let's see. Well, it's trades on the pink sheets. So there's less volatility in the pink sheets. But that doesn't mean it's a bad stock. There's some companies that are of 100 billion market cap that trade in the pink sheets, like non-U.S. companies. If there's no U.S. company with 100 billion market cap that's on the pink sheets, but if it's a non-U.S. company, they just didn't pay because it costs a lot of money to trade on a major stock exchange like the Nasdaq. It's expensive, and if you want to trade on like all these major exchanges in like a dozen countries, it could cost millions. What is it? SGAMF. So this is in yen. Okay. 20, 34, 37. Okay. Yen to US dollar. 0.0066. See how simple that is? I got it all set up. So I just put in the exchange rate. So I'm at 15. They're trading $12 a share. So it's a little undervalued. Do you get a dividend? 3% dividend. It's not too bad. You can see it's revenue is pretty flat. It was 300 billion yen for about a decade. 300 billion yen around that point, but it's grown a lot. Why is it up so much in 2023? Did they? You could tell I don't really follow this. Sega, Sammy. Can they even compete with Xbox or PlayStation anymore? Maybe Nintendo with the Switch. Well, their revenue grew 50%. So unless they made a big acquisition, they're doing something right. Yeah, pachinko machines. That's their big growth, right? This is why I don't like reading non-US companies. It's always so hard to full year. Wait, so they revised. Okay. Full year results. $280 million for entertainment content. I guess that's like the console and the games. Pachinko machines, $94 million. So is this like an AI play, Pachinko, or? Because you got to think like these types of companies can really benefit from AI. Imagine if a company that sells consoles upped its game and used a lot of AI, like it would be such an immersive experience, right? Yeah, BDCs, they're interesting. Business development companies. I think that's what it's called. So a BDC, it has similar characteristics as like an MLP or even a REIT, where they have to distribute at least 90% of their earnings to their investors in the form of a dividend. So they just invest in usually in startups, like smaller, lesser known companies. There's not that many BDCs stocks out there. It's not like a REIT. REITs, there's probably like hundreds of REITs. BDCs, there's probably like 50 of them. I don't know. What's a popular BDC? This is hard to read. JP Morgan. Are these BDCs? What's is that a JP Morgan? JEPI? So when you invest in a lot of companies, like if they're investing in kind of risky small companies, even if like half of them go bankrupt, you can still make money if 2 or 3 really blow up. You generally get a pretty good dividend. So this one, JEPI, that's the biggest BDC. Not doing so well. I mean, you could have got it below 50, but you're probably getting like a 6-7% dividend yield. Why don't they list dividend? They don't list the dividend yield? I guess the yield. So almost 8% dividend. So you get a good yield. Does anybody ever invest in BDCs? I've never invested in one before. This is a BDC, right, JEPI? Yeah, it is. I wonder if okay, holdings. There you go. So if you want to see their holdings, like what they own, small private companies. So financial services, 13%, technology, 19%. But if you even get one home run, it could like make your portfolio. It's kind of like those people who don't know what they're doing in investing. So they lose money in every stock, but they happen to pick like one company like Tesla and they make like all their money from that one stock. JP Morgan. Feppy? Did you mean Jeppy, or is that a Feppy? Is I wonder. I wish they would. There must be a place to find. Look at Jeppy, 7% yield. It's a good yield, but you just don't want to. There's usually a lot of downside. So if you want to know like some of the companies in the portfolio, these won't be publicly traded companies because they're generally pretty small companies. Like the biggest company has a market cap of 580 million, which is not small relative to the average company, but they're small relative to a publicly traded company. This is hard to read. But that's the biggest one. They have a lot of much smaller. This must not be a BDC because this has like big companies, Amazon. Let's try to. Okay. Yeah, I don't think that's a BDC, Jeppy, because it's Ares Capital. That's definitely it. I think that was an advertisement when I chose 42 billion, 2.4% yield. Let's see the portfolio. This is Ares. This is a Jeffries. Yeah, Jeppy. I think it was just I searched BDCs and it gave me a list of BDCs, but that was like an advertisement for me to click on. It's like a paid ad. Okay, so you can see this is Ares Capital. So where the companies are located, it owns the industry, the types of assets, whether it's a senior loan or subordinated, or it's equity. Okay, so you can learn about the companies. They have international companies. I didn't know they had international companies. All right, they own international companies, but the BDCs are only U.S. There's no BDCs outside the U.S. So the entity, the BDC entity, has to be a U.S. company. I think same thing with a REIT. It has to be a U.S. company. You don't have international REITs. Is that right? I think that's right. So it's pretty risky stuff. Lots of Helios Service Partners, Helix Acquisition Holdings. Like this company, like HGC Holdings, they're an operator of golf facilities. You go to their website. They don't even have a website. HEC. I don't know. I mean, you can't really get any information. You would think they'd make it a little easier to find. Let's look at another company. Okay. Honor Technology, Inc., nursing and home care provider. Here we go. Honor Care. Honor exists to expand the world capacity to care. As the world's aging population continues to explode, it's imperative that we develop the means to deliver quality care to older adults everywhere. What we're doing, Honor is the world's largest home care network with the most advanced care platform. I mean, you're probably not going to get much information. It's just a small business. And they issue, the BDC REs issue stock, and you buy the stock, and REs uses that money to lend to these small businesses. So if the small business makes money or is acquired, then REs will report that on their financial statements, and possibly the stock will go up. And REs reports revenue based off of the revenue they earned from those investments. It was 2.1 billion up to 5 billion. So you can read about BDCs, business development company. A BDC is an organization that invests in small and medium-sized companies as well as distressed companies. So they do buy a lot of distressed debt. We saw that on their holdings. A BDC helps firms grow in their initial stages of development, because if a company's small, they need funding to grow and scale. So BDCs are able to provide that funding, because these small companies might not be able to get loans. It's interesting. It's a little risky, but it's interesting. Okay, I'm getting a little tired. Yeah, well, thanks for joining. I'm working on a Netflix video, so hopefully I'll post that tomorrow. Okay, well, I'll talk to you later. Thanks, everybody, for commenting.